Hello, you're welcome to the Techie Accountant Show. This is the second episode, and today we'll be talking about this topic. Based on the significant economic presence order introduced in the Finance Act 2019, how do you suggest organizations as Netflix, Facebook, Twitter should be taxed in Nigeria? Let me give a little background to the topic. We know that right now, borderlessness is the new globalization. And with the advent of internet, a lot of digital services are being consumed in other countries, whereby leading to loss of revenue in that home country. For example, in Nigeria, typically we do advertisement through traditional media, either you're going to a media house, radio station, TV, or newspaper. But now most of us, we are actually on social media platforms. And on the social media platforms, you are able to advertise and you're able to reach more people. In fact, I think you're able to reach your your desired target audience. So advertisement has shifted to the digital way of doing that. And that has led to, will I say, revenue erosion for both media companies and even the government in each country because of, you know, digitalization. So what do you think? How do you think it should be taxed? Now, Jim, will you go first?
Okay, so let me go first. So I think it's pretty clear on how they should be taxed. And the order already described how they should be taxed. And the other said if you make at least 25 million naira in a year from any of these various digital platforms from Nigeria, then you will be subject to tax in Nigeria. And one main concern that is apparent is how do you then get to track these people when they're not available, when they're not here with brick and mortar offices? You cannot find them. I imagine that when you have a Netflix, a Facebook, and all that, there's some gateway that you're able to track how much money goes to that entity in Nigeria. Say, for example, every payment you make to Netflix, you probably make it through a card or through a bank account and stuff like that. So I'm not a bank expert, I'm not a banking expert, but I imagine that if you go through the CBN will be able to find a way of determining how much inflow has gone to Netflix, how much money has gone to Facebook, how much money has gone to an Uber and stuff like that. So I think it's some cooperation between the CBN and maybe the NCC and the Communications Commission to determine how much money each digital business has made out of Nigeria. That way you can track the volume they have made from Nigeria. And second is that many of these companies are based in countries that have a particular regulation that requires them to do something we call the country by country reporting. So I'll give you an example.
Yeah, yeah,
Facebook is based in the US. They have an obligation to do a country by country report of their financial statements of their income. So if they've made 100 billion USD in a year, they're supposed to do a report that shows how much came from US, how much from Nigeria, how much from the UK, and all that. And because Nigeria is also a party to a multilateral treaty where companies who do business across nations are required to then the tax authorities of those countries are required to share country by country reports with Nigeria. I'll give you an example. Facebook is in. Let me use um, Bolt. Bolt is based in Estonia, and you have Bolt doing business in Nigeria here. Nigeria wants to know how much money Bolt has made from Nigeria. All the FIS needs to do, which is the Nigerian Tax Authority, is to do a correspondence to their tax authority in Estonia. And because of the regulations we have here, and they are able to pass out the information of how much income Bolt in Nigeria has made. Because they would have reported it in Estonia to say that we made $100 billion this year. 1 billion out of this 100 billion came from Nigeria, and we didn't have that information here locally. So I think that's the stronger tool using the country by country information to be able to track this guy. And what we really need to do extra is to ensure that the network is as rich as possible, because I know not all countries are signed up to that network of country by country report. So it's to ensure that I mean, we know where the bigger companies are coming from. Most of them are from the EU and from the US. If you are sure that those two regions are covered within the country by country reporting network that allows you to share information. Now you're almost certain that if you request that information, you will get that information. And we used to have a concern locally before, and the concern was that in Nigeria, we didn't have a data privacy regulation. And if you don't have a
Yeah.
data privacy regulation, nobody's going to share information with you that is going to release their private details, and if they're not sure that they'll be protected. But we now have that now in a way. So I imagine that once the authorities request it, I mean, the release is going to continue to happen. So using the CBN NCC information and the C by C, country by country reports, are two menus to help us track how much money these internet companies make from Nigeria.
Yeah, yeah, that makes sense. But I actually have, well, I say, differing stance from what you said,
Okay,
in terms of how they should go about it, you know.
okay.
But before I share my own opinion, Itoro, please, you have the floor. Let's hear your own opinion too. Can you hear me? Oh,
Looks like
okay.
it's proven.
When Yeah, so let me just go ahead. So I think that you know the problem in Nigeria, for example, is not about the laws. We have the laws. It's more about implementation. And I think that as much as possible, when we come out with these laws, we should think about the easiest way to also implement it in a way that will be cost efficient and also effective. So because right now, what the rule is saying that any company that generates a minimum of 25 million, you're expected to file your annual returns in Nigeria, and because they
Yeah.
expect you're expected to file your tax returns rather in Nigeria. Um, People can easily evade that. My own opinion, I think that it should be charged based on revenue, and it should be done in a way that it's automated when payment is made. So assuming I want to do a Facebook ad right now, from the comfort of my house, if there's an agreement and maybe they're like, okay, every 3% of revenue you earn from Nigeria, is going to be taxed. Will be your tax. So that should be automated, that when I'm making that payment, immediately each party, gets the money that attributes to them. By so doing, it reduces the cost of ensuring that they comply or compliant cost, right? It reduces the cost significantly. And I think also that can be easily traced. Unlike ensuring that they file. Yes, I can file. Another problem or challenge I foresee with this model that is in place right now is, how do you determine the attributable cost to the revenue generated in Nigeria? Put into consideration that most likely the equipment that is being used, the technology that is being used, is controlled from a central area, just that it's feeding different countries. The question now is, how, if I want to, I'm saying that this is my revenue, of course, in accordance to tax laws, I'm supposed to match it with the attributable cost also. Because in generating that revenue, you actually incurred a particular cost. So the question now is that, how do you determine the attributable cost in that instance? And that's why I feel that, my own opinion, I think that um, the rate should just be on revenue, and it should be a flat rate. Then it should be revised from time to time. An analysis can be done to see if the rate is sufficient, or the rate is not effective enough. In comparison, you can put a lot of parameters and weigh them to see how effective they are. So that's my own opinion. Itoro.
Okay. Okay, she's back.
I'm so sorry. Network has been
Yeah.
so bad for me here.
That's fine. You have the
Yeah.
floor. And please, I need you to speak out a little.
Oh, okay, no problem. Okay, for me, I feel that this is like a right, like first of all, I feel it's the right step for Nigeria at this point in time because of this era of globalization. So now in the next few years, we know that a lot of companies would actually go digital. So they have to still generate tax or generate revenue through tax. So I feel it's a good step. But now, are they ready for the challenges that they would encounter? Because we actually have good laws, good orders in Nigeria, but the implementation is not always so great. So now we know that there will be an issue of revenue. How would they know the revenue that is generated by these companies? How would they have access to the financial statements and all that in order to pay, tell them to pay tax or know the accurate tax to charge? That's first of all. Then second, are they ready for like infrastructures in the sense that are they ready to employ IT experts? Are they ready to get like digital tools?
Okay.
So
I think we lost. Okay.
that's the
Very
first
clear.
step.
Oh,
Then
okay.
also, we also know that.
Oh, I think we lost you too there.
Okay, let me now go
We can't hear you again. It's really breaking.
how
Oh, it's terrible.
Yes, it is. Okay, now, Jim, you wanted to say something. Please just go ahead.
Okay, so while I understand, while I appreciate that we could do some tax on revenue, but it also comes with its own challenges. Because when you do tax on revenue, you assume that the business is making profit from Nigeria. Because the whole essence of an income tax is tax when there's profit. If you do on revenue, you just assume that there's profit, and that's not always the case. So it can be unfair. It can be deemed to be unfair practice, which is why it's highly discouraged. I mean, a couple of years ago, India introduced some form of tax on revenue for internet businesses, and they still do it, but there's a lot of backlash against India for doing that kind of stuff. Secondly, is that when you do tax on income, what happens is that in some cases it's not very clear which country is supposed to tax it, whether Nigeria or the country of origin. What many countries do is that I am based in the UK. I've made money from Nigeria. If I'm supposed to pay tax on the money in the UK and I've already paid tax on it in Nigeria, what happens is that whatever I paid in Nigeria will be taken against the credit for me
Yeah.
against the tax I'm supposed to pay in the UK. But if you do a
Yes.
tax on revenue, you will not be able to take that against it because what you are taking tax credit against is income tax. But if you tax by revenue, that's certainly not income tax. So it comes with that challenge,
Yeah.
and because we are not a big economy, global, you're not an economic powerhouse where you can dictate how things happen. There's going to be a lot of backlash against Nigeria if we try to do stuff like this. So I'm not sure we have that economic power to be able to call that shot, say we'll tax the revenue. Yes, cost reduction is a major challenge, but even then, there are several models to try to allocate cost to revenue. A very simple one, which is to use a pro rata basis to allocate revenue and cost basis of revenue. What's your global cost? What's the global revenue? Then allocate that cost on that. But not very straightforward to be very honest. I mean, it comes with its own challenges. We should be prepared to make things happen. But eventually, what will encourage foreign business? I mean, the only issue is this: I would rather pay tax in an economy where the taxes is lower than where the taxes is higher.
Yeah.
Our taxes is
Yes.
30%, one of the highest in the world. Many of these countries do 28%, 25% tax rate, and that makes us not competitive. Maybe we had a
Yes.
25% tax rate. I mean, nobody will be so bothered. I mean, they won't have issues filing returns here. They won't have issue
Yeah.
paying taxes because it can help them to avoid
True.
paying taxes in those other regions. So, to be honest, it's not a very straightforward conversation to have. Not one solution, there are multiple
Yeah. I,
solutions that needs to be
Yeah,
in
I
place.
totally agree with you. I think we just need to weigh the different options and, compare the pros and cons of each option. And based on that, pick the right one. The point is, it has to be informed. It has to be driven with data. It has to be driven by analysis and not, just
Absolutely.
sitting. Yeah, exactly. Because with what has been done right now, what I foresee is that there will be a lot of tax evasion. Like you requesting a company to file on a monthly basis, and the company is not resident. There are a lot of, there are a lot of payments we do online that a lot of companies we pay to, or services we purchase, digital services that we purchase, that I'm sure that a lot of people are not aware of. So where are we going to start from? So that's my own opinion. Anyway,
if they want to be aware, they'll be aware. I mean, the data is there to make them to be aware who is collecting what money.
yeah,
Every naira that leaves this country is trackable. Every naira. So
yes.
if they're ready to do work, they will do it.
All right. Thank you so much for your time, and I'll see you some other time. Thank you for sharing your thoughts with us. All right.
Thank
Bye.
you so much. Thanks, Victoria, for
Bye.
joining too. Bye.